Now look at example 6 in your tutorial book. This is the information given. Okay, and this is the additional informations. Now this is the instructions, and the step for solution is given here. Okay, please follow the steps. Now the instruction is to prepare a statement of profit or loss for the period ended 31st December 2006, and B, prepare a statement of financial position as at 31st December 2016. To find out how much is the account receivable, we can do T account. Okay, so we debit balance brought down, we credit cash or bank. This is the cash or cash received from the debtors, and we credit bad debts or AFDD. We credit sales discount, credit sales return and allowance. So we credit the balance carried down. Okay, so we can get the how much is the account receivable. To find out how much is account receivable by using T account, we can credit balance brought down. Okay, debit bank or cash, then debit purchase discount, debit purchase return and allowance, and debit balance carried down. So we can find out how much is the account payable. So this is the way to do the salary expense T account, and this is the way to do the purchase T account. As you see here, this is only the reference for you. In example 6, step 1, to calculate the amount of sales. So remember the formula for the total sales. Total sales equal to cash sales plus credit sales. Cash sales is given. Okay, so cash sales in the cash book record, we got cash 12,000 plus the bank 7,800, so your total cash sales is 19,800. So in order to find the credit sales, we will need to calculate through a T account by finding from the account receivable. Okay, in the balance at assets and liability on 1st January and 31st December 2006, okay, we know that the balance brought down is 7,620 for account receivable, and the balance carried down is 20,990. So by the way, the bank here, okay, the bank here we got also given 5,600, and for the bad debts is in the additional information C, account receivable written off as bad debt 2,500. That's why we credit here. Not 2,500, is 250. So we credit here bad debts 250. When we add on this one, okay, we got this amount 26,840 minus the balance brought down 7,620. So we got to our account receivable. That means this one is the credit sales. So credit sales is 90,220. So we just add on here. Okay, we just add on here. So cash total sales equal to cash sales 90,800 plus credit sales 90,220 equal to total sales 39,020. To calculate the amount of purchases, we will use the formula as stated here. The total purchase equal to the cash purchase plus the credit purchase. Okay, but in this case, example 6, we will need to minus drawing. Why we will need to minus drawing? Because the additional informations B given, drawing of inventories amounted 150. So upon this formula, we will need to minus drawing. Okay, so as you see here, the total purchase equal to the cash purchase. Cash purchase is given in the cash book record. Okay, now is 1,750 plus by bank 3,000, so together is 4,750, and plus credit purchase. Credit purchase, we must do it by the T account way, then we will find out how much. Minus drawing is given in the additional information B, so drawing is 150. So let's see, how do I get the 910 here? Okay, now in the T account of account payable, okay, now we need to debit cash 500. Debit cash 500. This one is shown in the cash book. Okay, it's shown in the cash book. Okay, so you debit account, debit cash. So this one is also given in the balance at assets and liability. Okay, so you credit balance brought down 750, debit balance carried down 1,160. so when you add up here 1,660, you minus balance carried down 750, that's why you get your 910. so this one is credit purchase. Okay, this one is credit purchase under account payable. So credit purchase 910, so add up 4750 plus 910 minus 150, you get your total purchase 5510. Number 3, to calculate the amount of adjusted expenses. So in your cash book record, the salary, rent and insurance is the expenses. Therefore, the salary expenses will be 1,000 plus 5,000 equal to 6,000. For rent, we need to do the T account for rent. So as the information given, the balance brought down is 600 and the balance carried down is 100. So the cash about the rent is 1,400. Therefore, when you calculate this one, you got the 1,500. So 1,500 minus 600, you got your profit or loss here 900. This 900 is an expense. For insurance, the additional information given, insurance paid on 1st September 2016 for an insurance policy for a year. And the company pay 1,500 for the insurance. Therefore, we need to draw a timeline to calculate the insurance expense and prepaid insurance. Okay, since it started on 1st September, so until the end of accounting period 31st December, how much is the insurance expense? Is 500. Why? Because 1,500 times 4 months. Okay, 4 over 12, so you got 500. So here 1st September until 31st December is only 4 months. Okay, so this one is your insurance expense. Meanwhile, the prepaid insurance will be 1,000. Why? Because 1,500 times 8 months. Okay, so you got 1,000. So in order to find out the expense for insurance, okay, you need to draw a T account for insurance. Okay, since the bank credited 1,500, so your insurance account will debit bank 1,500 and your balance carry down for insurance carry down is 1000. Okay, so 1500 minus 1000, you got 500. So this one will be your insurance expense. Now number 4, calculate the amount of adjusted revenues. In the information given, the commissions here is the revenue 1450. So we do the T account for commissions revenue. So as given in the informations, the cash in cash book, we debit cash 1450. In commission revenue T account, we credit cash 1450. Then according to the questions, balance brought down is 600 and balance carry down is 9900. So when you total up here, you got 11350. 11350 minus 600, you get your profit or loss here, or income statement, you just write here either one, 10750. Why is it in the debit side? Because when you transfer to the income statement or profit or loss, it will become the revenue at the credit side. So commissions is 10750. Question 5. Calculate the opening capital. In order to calculate the opening capital, we will use the informations here to calculate the opening capital. In order to find the opening capital, we will use the formula opening asset minus opening liabilities. This one actually based on the asset equal to liability plus owner equity. So opening capital is owner's equity. So we got the asset minus liability. As you see here, the asset, we got premise 45,000 and furnitures 5,630, inventories 9,300, account receivable 7,620, accrued commissions 600, cash 1,550, bank 11,230. So we got total assets is 80,930. About the liabilities, we got accrued rent 600, account payable 750. So total is 1,350. So this one assets 80,930 minus liabilities 1,330. 1,350. So we got our opening capital is 79,580. Look at the last questions. Prepare a statement to calculate profit and loss and statement of financial positions. To calculate the profit and loss, we got one more additional information to take care of. That is depreciation all fixed asset is 10%. Therefore, for premise, 10% times 45,000 equal to 4,500. For furniture, 10% times 5,630, you got 563. To do the comprehensive income statement for the year ended 31st December 2016, we will do the sales minus cost of goods sold minus ending inventory. Then we will get our gross profit. So sales, as we calculated in step 1, the amount of sales, we got 39,020 minus cost of goods sold, and the opening inventory is given 9,300. Okay, then plus the purchase. The purchase, we refer to the step 2. The amount of purchase is 5,510. So we got the cost of goods available for sales 14,810. So we minus any inventory, the given one, 1,500. Therefore, you got the total of cost of goods sold is 13,310. So sales minus cost of goods sold, you get your gross profit 25,710. So remember, after this one, you will need to add on your revenue and minus your expenses. Okay, so your revenue only has one item, that is about the commissions revenue. Okay, commissions revenue, you can refer to your step 4 you have counted. Okay, the adjusted revenues is 10,750. So you got total 36,460 minus all your operating expenses. The expenses here refer to the adjusted expenses that you did in step 3. Okay, rent expenses is 900, insurance expense is 500, and salary expense is 6,000. Depreciations, we have just counted, am I right? So this one 4,500 plus 563, you got 5,063. And remember to minus your bad debt. Your bad debt is given in the informations C, 250. So you got the total of operating expenses 12,713. So your this amount minus this amount, and you get your net profit 23,747. To do the financial position statement as at 31st December 2016, okay, this is the asset, and asset divided into non-current asset. Non-current asset, we have premise 45,000 and minus the accumulated depreciations for premise 4,500. How do you got this? This is the 10% times 45,000. That's why we got 4,500 here. So this one minus this one, you got 40,500. For fixtures and fitting, we got 5,630 minus accumulated depreciations dash features and fitting, that is 10% times 5,630, you got 563. So this one minus this one, you got 5,067. So this is for the non-current asset. Now look at the current asset. Okay, the current asset, we got the cash. How do we find out this amount? This is at the cash of debit side, okay, minus the cash of the credit side. Okay, so this is 1,550 plus 12,000 plus 1,450 minus, okay, 1,750, 500, 300, 1,000 and 1,400. That's why you got this amount, 10,050. For the bank, okay, we find out from the calculation as here, as written here, 12,230 plus 5,600 plus 7,800 plus 10,000 minus 3,000 minus 5,000 minus 1,500, and you got 25,130. For inventory, is given in the balance carried down, okay, 1,005. For account receivable, also given 20,990. Accrued commissions is also given 9,900. And the prepaid insurance, actually we counted before. How do we get the 1,000 here? Is 1,500 times 8 months. Okay, that's why you got 1,000 here. So the total of current asset is 68,570. So we add up all this one and we get the total asset 114,137. Now look at owner's equity. Okay, owner's capital, we got opening capital. Okay, as we calculated in step 5, 79,580 plus the net profit as we calculated in the income statement, 23,747. So we got 103,327. Okay, minus the drawing. The drawing is drawing of cash 300 plus the drawing of inventory 150. That's why we got 450 here. So this one minus this one, we got our closing capital 102,877. Now look at the liabilities. For the current liabilities, we got account payable is as given 1160 and rent payable is given 100. So we got our current liabilities 1260. For non-current liabilities, we got bank loan is given 10,000, and we add all this one, we got 114,137. So the amount here is the same. So this is the way to do your financial positions.